C.K. Narayan joins us right now to give us his sense of how the markets are looking right now and what you as a trader should be doing in the near to the medium term. Dr. Narayan, thanks so much for joining in, and of course, Happy New Year from all of us here. What's the sense? We've started off the new series and the new year on a fairly good note. The question mark is whether or not we can continue these gains into next week.
Well, I think it's not even a fairly good note, it's a whoppingly good note. So maybe a little too much for a lot of people to digest. You know, when markets actually open with so much of an upside gap, it becomes very difficult for a lot of traders, in fact almost all the traders, to go fresh long. So which is probably why you're seeing the market slightly stagnate at the higher levels, except for some amount of shorts getting closed out. I don't think too much of fresh buying has really happened, and that's very typical when you have these kind of large upside gaps. So now the key thing is, if the market were to stay around these levels, then in a day or two, most of the traders get used to the higher levels. They forget about the large upside gap business, and it's then that they look to create long positions. So if the market has to go up, I think it will have to stay up here through Friday and through perhaps much of Monday, which is by when most people would probably work up some courage to go fresh long at these higher levels. As otherwise, we all think in a linear fashion, and since we've all been at about 5100, 5200, certainly coping with 5400 plus levels or close to 5400 levels becomes difficult for most, except for the very, very professional trader. So I think the market would need to consolidate these gains for it to stage even higher. The fact that the market has not receded the ground clearly indicates that there isn't too much of pending long positions. Whatever was there, I think in the first maybe 10 minutes, that would have all gone already. So we don't have a market which is overbought. So, but then an overbought and not overbought market by itself cannot go up. It needs fresh buying to emerge for it to go up further. As of now, that evidence has been lacking, except in a few items, particularly the metals pack. So if at all I'm inclined to sort of venture my hand with some adventurous buying, it would be mainly in the metals pack. Well, on a day of such bullishness, it's clearly trades on the buy side, and sort of being a little conservative, picking stocks which have not moved up maybe that much. So two buys. Century Textile is the first. 325 is where it is trading at. Keep a stop at about 318. Look for a target around 335. Second stock is something which has been down and out for a long time, but certainly seems to have shown some fresh signs of life today. This is NHPC, which is currently trading at about 25 rupees. This is cheap enough to be bought on delivery, or for those who wish to trade it on futures, that is also available. So NHPC with a stop loss at about 22 rupees and with an expected target around 30 rupees in the short term. These are the two that I would run with.